Hey guys, Taylor with GammaEdge here, coming at you with a 5-minute market recap from today, May 21st. We're going to be specifically covering SPX intraday action today. So the session can be recapped in in the morning, early afternoon, just a lot of chop action within our transition zone. Then we had the massive meltdown intraday based on the news event. And then A, could we predict this was going to happen? No, but B, what we could do is we could understand after the market got down to a key level we recognized in the pre-market at 58.75. And using our intraday volume analysis and the market trend model, we knew that the trend was lower from there. And so we were able to catch nice trades once that happened. And let's get into the key levels and then the intraday action. Right, so every day in the pre-market, we go through our pre-market routine. It's the same thing day after day after day. The reason for this is when you have a regimented process, it's easy to see when things are changing or if they're staying status quo. And in general, how it works is we first zoom out, we understand what the broad landscape is, and then we narrow in ending with 0DT. So starting with our market trend model, our way of gauging trend and momentum in the market, everything was generally bullish. However, at this point in the move, it's getting a bit long in the tooth. So entering signals long is best once we get a reset of our market trend model. From there, we then analyze SPX options market. Reason for that is A, it's forward looking. B, understanding the SPX gives us a broad understanding of the general market given the size that is transacted there. So again, SPXA, generally bullish, call dominate above and low spot price. Again, looking at SPXP, again, call dominate above and low spot price. So from a longer term prime frame, a swing trading time frame, the overall broad market is constructive. Now, that doesn't mean place of trade right now. You still need to have your own fundamental system of how you're entering and exit trades. But from a pure market environment point of view, we are in a call dominated regime. But again, going back to the market trend model, a bit long in the tooth in terms of the short-term move that we've had. So in terms of risk to reward, this is not really the best place to be putting trades on here. This would have been back on 515 when that short-term trend was resetting and starting to get that next impulse leg higher. So next, now we can get into our analysis of 0DT dashboard. Again, keep in mind that we get our overnight updates that are live around 6:30 today Eastern Standard Time. So plenty of time before the market opens to understand what structure in the market is. Now, keep in mind, one thing to note is, yes, we use open interest as a primary input for our model in terms of the pre-market analysis. And that's all you need to understand where the key level is at for the day. If it makes you feel good at night, yes, you can go and you can get, the flow that's happening intraday. You can interpretate those tags and you can become obsessed with, dealer hedging at every single strike, but that's a bit boiling the ocean in our opinion. The levels that we're able to generate in the pre-market hold true day after day after day. And again, they prove their worth today that we will get into now. So if you're unfamiliar with how we do things, so everything starts with our transition zones. The blue box is our DEX transition zone, which is based off of delta and really the distribution of the open interest throughout the structure. And within this zone, we expect to see choppy price action. And specifically, the strike of 59.40, right, was explicitly called out in our pre-market prep as a key level. To the upside, because keep in mind, we are opening below the bottom of our transition zone. And so, right, we were saying that this was going to keep a lid on price action to the upside, but that 59.40 was kind of our key fulcrum in the structure today. Once we understand where the DEX transition zone is, then we shift our focus to where the drunken sailor zone is. And that is the orange box here, which is identified as 59.60 down to 59.20. Right, and the way you can think of the drunken sailor zone is these are kind of two major goalposts that are centered around the transition zone that kind of represent peaks in speculation. And so what we observed is it takes a lot of intraday activity to push us through these zones. And now once we can get on either side of those zones, then it makes progress going in that direction a lot easier. But again, these are two key goalposts that, if you're bullish, you want to break above the zone. If you're bearish, you want to break below the zone. And then, right, everyone had 58.75 as a key level of reference to the downside, like nothing special. That's a quite obvious strike there. Again, you don't need to understand intraday flow to understand that 58.75 is a key level. So right now, here we have the 5-minute price chart, and before the session started, we have these levels drawn. Again, the gray zone is our drunken sailor range. The red line is prior day close, which is also 59.40, which is the key fulcrum level that we talked about. So you did have nice confluence there. 5900 A, because that's a key psychological level, and then we have 58.75 identified down here. Right, so heading into this section, 59.40 did exactly what we said is going to do in the pre-market note. It is going to put a lid on the market. And again, going back to our market trend model, intraday, we just saw zero evidence of really any significant push higher. So again, 59.40 to the upside made sense for that reason. Then again, looking at our intraday volume analysis, just quickly, this is, understanding SPX ZDT volume, call side above, put side below. Again, then we're looking at the middle of that distribution of the volume every 5 minutes. We plot that so we can understand the trend of speculation throughout the session. Again, then early on, here's 59.50. We really just see volume really making no material move higher. It's more or less chopping around. Therefore, price action is going to chop around too because price follows where volume is occurring. So, right, you had the confluence of 59.40 being a key fulcrum level. You also had the confluence of really no call speculation meaningfully trending higher. So again, with that, both of those factors are, putting a lid on the market to the upside. Right, and then yes, we did get this dump down off 59.40. Could we have predicted that dump down? No, it was a news event. Who knows how the market's going to react on any news event? However, when we were sitting at 59.40, it was not necessarily the smartest thing there to be thinking that we were going to continue to be moving higher because there was no evidence of upside speculation. And right, you don't need to know intraday dealer hedging dynamics or any of that to just understand what broadly is transacting in the market at that point in time. And then, right, got the dump down, got a lot of oscillation between 58.75. As you said in the pre-market note, is going to be a key level of interest if we were to see a move down like we got. And then from this point, this was a great level to size risk onto the downside. The reason that we were looking to the downside from this point in time is A, the trend of intraday price action was certainly trending lower at that point. We were making lower lows and lower highs. B, the market trend model, we were starting to see selling both on the filter tick point of view and then the cumulative tick, obviously. So there was some heavy selling coming into the market. And then C, from our intraday volume analysis point of view, we could see that the market, that the price action was trending lower, especially on the call side, was very aggressive to the downside. So again, you can obsess over, hedging dealer requirements at every single strike, get analysis paralysis, or you can just broadly understand what's happening in the market overall. Understand where your key levels are at, understanding kind of what the intraday volume is doing, and then, having a plan and actually executing on your plan. So right, I know I'm just over my 5-minute mark, but just to recap, A, it starts with a pre-market process. We broadly understand what's happening with the market trend model, SPX full complex, and we zoom in the 0DTE. Yes, we approach this from a net open interest point of view, but who cares? Structure is the structure, and that must be navigated. We understand what the structure is at 6:30. From there, at the opening bell, yes, we are transacting, but then we use our intraday volume analysis. We use the market trend model to understand the behavior of those flows. And from there, we see if those flows and price action is lining up with the key levels based off of where speculation is positioned. And then, right, we execute from there if a trade presents itself. And ultimately, right, like our job is to give you an understanding of the environment and where those key levels of reference are at. From there, it's on you to press the button to execute the trades. Something to keep in mind too is we are not just data providers. Like we are using this to put our own money at work behind. And we're in there every day in the markets, in the Discord, we're pressing buttons, we're discussing all that good stuff as well. And look, trading's hard enough. Some people prefer to do it alone, but if you are looking for of traders who are, yes, we're trying to make money using our tools, but B, we're genuinely trying to help other traders take this information that people tend to overcomplicate and unlock it as another tool in their toolkit, then we welcome you to come join the community, give it a go. We know it's not for everyone, but if you give it kind of a good, genuine effort, then we know if you stay, just a day, a week, or even a year, you're bound to get something of value that will help your trading going forward. So with that, appreciate the time, and we will talk to you guys tomorrow. Thanks. Bye.